What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Wanted to talk today about investment properties around here in Vermont, specifically long-term investments. When people say that they invest in real estate or they're a real estate investor, that can mean a handful of different things. There's a handful of categories that go into that, from long-term buy and hold investors to flippers to commercial to self-storage, Airbnb, things along those lines. So investors, it can be a pretty broad category, and not all of those markets react the same way. But I wanted to talk about buy and hold investors and people that are renting out their properties and what's going on with the rental market around Chittenden County as well. I know we primarily focus on the home buying and selling market, which is what I do for a living as a realtor. Is I don't do rentals. I'm just involved in the purchase and sale of property around here. But I wanted to talk about what's going on in the investor market, long-term buy and hold, and what's going on with rents. So let's take a look. The first thing, this was an article from about a month ago. It says here, Redfin reports reports investor home purchases fell by 30% in the third quarter, largest drop since the Great Recession, aside from pandemic start. So I'm going to leave this article in the description for you folks, but for the most part, this has to do with a lot of the iBuyers and big corporations that were purchasing property around major metro areas over the past year. I'm sure you folks have heard the stories about companies like Zillow just purchasing, tons of single family homes, or BlackRock, or some of these big investment companies just purchasing a vast amount of single family homes and either renting them out because the rental market is so strong, or turning around and selling them in the future because single family homes are based off of the price is based off of comparable homes. So you can buy one home, and then if you purchase all the other homes in the neighborhood for a higher and higher price, the value of the first home that you purchased all of a sudden is now worth closer to what you purchased the last home for, which was some of the strategies of these investors in other communities across the country. Not so much here in Vermont. Vermont is, historically a little less friendly to out-of-state investors, and they try to discourage people doing that sort of thing around here. Big companies coming in and buying a ton of properties and things along those lines. But we just got this report about the rental data around Vermont here, so I wanted to share that with you folks. If you look at the top here, this is the vacancy rate for Chittenden County. As you can see, we're at 0.8%, which is up from the low of 0.4%, which we had earlier this year, but it's still well below the 2.5% that we were experiencing before COVID. And something I found really interesting about this is that the average vacancy rate around Chittenden County for the past 20 years was 1.7%. So that's even below, even well below that 2019 number. And what's considered average or normal across the country in markets across the United States is a 5 to 8% vacancy rate. So Chittenden County historically well below that. And I'm going to try to leave this PDF in the description for you folks if I can. And I'm going to briefly go through it with you here on this video. But basically, they're trying to bring new construction to Chittenden County. If you look at, they have a nice chart in here, right here. So this chart on the right side of the screen, Chittenden County new supply and vacancy. So the red line there is the vacancy rate, and the blue line is the new supply being brought to the market. So as you can see, as new rentals are brought to the market, the vacancy rate tends to rise a little bit, which it is a good thing. It's a healthy thing for Chittenden County here. Obviously, new supplies and new construction has been slowed as supply chains and labor shortages hit Chittenden County, hit the building industry, and as they have the rest of the country here. Going back up to the top of this report, some interesting snapshots to talk about. Cap rates have gone up, which if you don't know what a cap rate is, but it's essentially the return um, on your investment. What your return would be if you were to purchase the property outright, income minus expenses, the total profit at the end of the year. What's your return on your money if you were to pay it cash? So if you had $100,000 property and you purchased it with a 6% cap rate, that would mean that your income after expenses, your net income is $6,000 per year. So the cap rates have gone up, but it's not because prices have gone down. As you see here, prices are averaging $106,000 per bedroom. So they've continued to increase year over year. But what's happening is rent has increased pretty drastically. Let's see, find these numbers here. Um, let's see. This is a chart outlining the rent increases compared to CPI. As you can see, the red dots here are the CPI numbers, and the lines are the annual rent inflation. So rent inflation has gone up by around 5.5% year over year. You see the annual average right there, which is higher than years past. And I'm really, it's really interesting to see these numbers because you look at the reported rent change number here, negative to 0%. Look at how many properties just don't raise their rents year over year. And this is what, a lot of these landlords, a lot of properties around Burlington aren't professionally managed and their rents aren't raised professionally. It's a lot of local landlords that are happy with the return they're getting and have had long-term tenants and decide to keep it at that rate for many years, as long as their tenants are happy, they're happy. But as more turnover starts to happen, and once rents start to get higher and higher, you can see here a higher percentage of landlords are raising their rents. And I will say 5.5%, just based on what I'm experiencing in the market from friends who are renting and from other experiences that I'm having with investment properties, what I've seen rents do over the past few years. In my mind, I think most rents around Burlington, around Chittenden County, it feels like they've increased by around 10% year over year. I mean, it's not reflecting in the data, and I think a lot of that is because these many rental units aren't professionally managed, and rents aren't being raised across the board on a year over year basis. But for the units that are professionally managed, I mean, basically anywhere in Chittenden County, you're paying around $800 per bedroom, I would say, and closer to UVM and the college rentals, it's really $900 to $1,000 a bedroom. So even though cap rates have gone up and people who are willing to purchase the property are getting a better deal, more bang for their buck because rents have gone up, even though they might be paying a higher price, rents have gone up enough so their return is better. At the end of the day, there's still not a lot of inventory on the market. If we take a look at all the multifamily properties in Burlington right now, or not in Burlington, but in Chittenden County, let's do a quick search here. I'll show you guys on my screen. So as you can see, active Vermont, Chittenden County, there's only 20 multifamily listings that are active in Chittenden County right now. So inventory is still really low, even though prices are high and the cap rates are better than they have been in the past. People aren't selling. I mean, there's just not much inventory on the market as far as investors go because rents have gone up, on average 5%, it says. But if we go back to this chart here that we were looking at, let's see, switch it back over here for you folks. So 20% of landlords have increased their rent by over 10% on an annual basis, and another 20% have increased between 5 and 10%, which is significantly more than years past. So these landlords are, they're making much more money. They might have locked into a lower rate over the past few years, as people did with single family homes, or they're just enjoying more profit than they've seen in years past, which doesn't give them a whole lot of motivation to sell, especially when vacancies are so low. Of course, you're going to have people who want to sell for a variety of reasons, but I think the profits around the multifamily market and how profitable long-term rentals are right now with these low vacancies are keeping inventory tight. So anyway, I wanted to just give a brief overview of what's going on with rents, what's going on in the investment market here in Chittenden County. Let me know what you guys think. Leave any questions in the comment sections below. If you are interested in purchasing or selling real estate, investment real estate, or single family homes, residential real estate here in Vermont, all my contact information is listed below. Feel free to reach out, and I'll see you guys in the next video.